Hello. Good afternoon. Bonjour, hola, konnichiwa. Hello, good afternoon. I hope everyone is doing well wherever you're watching from. Hello. My name is Richard. I am a managing director. I run a design studio with my friends called Comuzi. We've been running for about 7 years now. Just giving you some quick facts about myself. I used to wear boot cuts when I was younger, proudly, but my friends laughed at me so much. So now I wear straight jeans, and I also got shipped to Nigeria for 3 years. So you might see some of that like freshness coming through today. But yes, it is lovely to meet you. Lovely to have you here, and thank you for signing up to this class. I actually can't see anyone that's watching, so right now it feels like I'm talking to myself, but I'm speaking in good faith that this is being broadcast on YouTube. Welcome to M&C Saturday School. We are an organization that teaches the community the basics of business. It's set up by a group of individuals passionate about community development, and we want to make sure that underrepresented groups have access to training opportunities and rewarding entrepreneurial careers, if that is the route that you decide to take in life. Today I'm going to be talking about business finance essentials. Like I said, I'm the MD at Comuzi, which means on the day-to-day, I run a lot of the finance and the operations. And so I hope that I'm an expert enough to teach this class. But today we're going to be going through quite a few topics. We're going to be talking about the pros and the cons of running a business as a self-employed versus running it with an incorporated business. We're going to be talking about whether you need a company/business bank account. We're also going to be talking about registering for tax via HMRC and how you do that. We'll be talking about the government grants and loans available to you. We'll also be talking about like funding options and raising funds, whether that's through like a VC firm, crowdfunding, or bank loans. We'll also be talking about whether you need an accountant and at what point will you need one, how costly they are. Those two are like really important topics. And VAT, so like when you need to consider registering and to whom it applies. By the way, if you have any questions, please put them in the private chat or the YouTube chat, and they should get to me and I should be able to answer them at the end of this class. So firstly, we're going to be talking about working for yourself. If you do start working for yourself, you are classified as a sole trader. This means that you are self-employed, even if you haven't told HMRC yet. So I'm sure that you've heard the term sole trader. It essentially means that you are working for yourself and that you do not run a limited company. You can be employed and self-employed at the same time. So if you work, for example, at a store or arts organization and you run your own business in the evenings, you can be the same. And there's like no shame in saying that you have a job while you also run your business. Once again, if you're a sole trader, you run your own business as an individual and you're self-employed. You keep all your business's profits after you've paid tax on them, which means that you don't have to share that profit with anyone else because you run it by yourself. But you're also personally responsible for any losses that your business makes. And so this is something in business that we call unlimited liability. So if you run a business, it's limited liability, which means that as an individual, you are not personally responsible for any losses that your business might make. So sometimes in the news, you'll hear this business has gone bankrupt or this business has gone into administration, and it's the business that is essentially responsible as opposed to the people running that business. If you like sell random things on Etsy, if I've pronounced that well, eBay, like occasionally, then you're probably not trading. You can't use any losses you make as part of a hobby to reduce your tax bill. So back in the day, for example, I used to sell like G-Shock watches back in college. Like I would probably not be able to class myself as a sole trader because I was very inconsistent in doing that. You're probably self-employed if, number one, you run your business and you take responsibility for its success and failure. You have several customers at the same time. You have freedom in terms of how, where, and when you do your work. You can hire other people at your own expense to do the work, and you provide the main items of equipment to do your work. You're also probably self-employed if you're responsible for finishing any unsatisfactory work in your own time, if you charge a fixed price for your work, and if you sell goods and services to make a profit, so eBay, Amazon, etc. You could be classed as a trader if you sell goods or services. If you're trading, you are self-employed, so a bit of a repeat of what was said before. But again, you're likely to be trading if you sell regularly to make a profit, so not inconsistency. You make items to sell for profit. You sell online or at car boot sales through adverts, or you're paid for a service that you provide. If you are a sole trader, or you need to set up as a sole trader if you've earned more than £1,000 from self-employment between the 6th of April, this will be different, 2020 and 5th of April 2021. If you need to prove that you're self-employed to claim tax-free childcare, or you want to make national insurance payments to help you qualify for benefits. To set up as a sole trader, you need to register for self-assessment and file a tax return every year. You should be able to do that via the government gateway site, if I'm correct. If I'm wrong, I will correct myself. But yeah, 100% sure that I'm correct. Many of these also apply if you own a limited company, but you're not classed as self-employed by HMRC. So I run a design studio with a couple of my friends, Akil and Alex, and we are not classified as self-employed. We are classified as individuals that run a company. And so we are both owners and employees of our own companies. We own shares in the company, but we're also paid by this limited company that we run. What are the pros and cons of running a business as self-employed versus an incorporated business, and vice versa? Naming. So once you register your company with Companies House, your company name is protected by law, which means that no one can use the same name as you or anything deemed to be too similar. As a sole trader, it's possible that someone could trade under the same name as you, and you wouldn't have any legal protection to do anything about it. One of the things that I would advise also is, if you can and if you do have the resources to get a trademark for your company name specific to the industry that you're operating in, because that gives you more legal protection over the name. If someone set up a business with the same name as yours in the same industry, this could damage your business, and you'd have to go through the effort of changing the name of your business or going to court, like whatever route you take. Costs. So one of the kind of cons that people might mention about setting up a business as in comparison to running as a sole trader is that the startup costs and the running costs are significantly higher, but setting up a company isn't that expensive. You can register via Companies House, and I think it costs about £15. There are also online services such as the Company Formation Partner that allow you to set up a company from as little as £9.99. Historically, you would pay your accountant to handle all the administration involved, but most of these tasks can now be done fairly easily and painlessly online, as I've mentioned. We're going to be talking about getting an accountant towards the end, because I think it's extremely important, and I've got like personal experiences to back that up. One of the benefits of running your business as a limited company is it enables you to pay less personal tax than a sole trader. So corporation tax in the UK, if I'm correct, is currently set at 19%, which means that at the end of the financial year, whatever profit you make, you have to pay 19% to the government. Whereas if you made 100 grand as a sole trader, for example, your tax rate would be much higher. So I think it's about 40% if you're earning about 100 grand, and it's, when it gets to like 150, your income tax is about 45%. So setting up a limited company or corporation in many ways protects you from a lot of the income tax that you might have to pay. There's also other ways of paying yourself if you run a company or if you own shares in a company, such as dividends, which allows you to essentially pay yourself, and essentially which allows you to pay yourself and pay less tax compared to what you would pay if you were a sole trader. Distinct identity. So one of the things that I mentioned before is when you set up a company, you have limited liability, and so that distinct identity protects you as an individual. So I'd use a random example. Let's say like I've used this example before. Let's say I was a rapper and my name was like Rich Gold, and I was a sole trader and I didn't have a business, and I went to perform at the O2 and I broke a really expensive piece of equipment. If I was a sole trader and the O2 took me to court, I was taken to court, I would have to pay that out of my own pocket. Whereas if I was a company, or if the record I was doing, the music I was making was done under a company, then the company would be liable. And so once again, having that distinct entity allows you to protect yourself. Also being a separate entity in terms of like the company bank account, the ownership of assets, the contracts that you might have are going to be between the business and your clients or your customers. So once again, you have the reassurance of limited liability, which is that you're only partially responsible if something goes wrong. But if you're a sole trader, you don't have that benefit. Professional. So having a company gives you a much more professional image. So if you're doing business with larger companies, for example, they might prefer to deal with limited companies as opposed to sole traders or partnerships. Running a design studio, we see that with many of our big clients, and some of them will ask for documents that sometimes only a business might be able to provide, or they'll ask questions that might insinuate that if you're not a business, it would be very hard for you to apply for that contract. Funding. So if you are, or if you're running a business, it's probably going to be slightly easier for you to secure business finance than it is if you're a sole trader. My assumption is if you as a sole trader wanted to get funding, the bank or the organization giving you the funding might say, well, you're an individual, how do we know you're not going to run off with this money? When running a business, you will need to keep records of your business's sales and expenses. There's different like software if you don't want to do it manually. At Comuzi, we use Xero. I know there's, I think if I'm correct, FreshBooks, QuickBooks. There's quite a lot of software that allows you to keep track of your sales and expenses. If you're a sole trader, you'll need to send a self-assessment tax return every year. You'll have to pay income tax on your profits and national insurance. And you also need to apply for NI number if you're moving to the UK to set up a business. If you've grown up here, then that is a number that should automatically be given to you when you're 16 and 15, if I'm correct. I can't remember. Do I need a company/business account? So there's no legal requirement to open and operate a business bank account, but you will find it extremely difficult to trade and manage your business successfully without one. Having a business bank account means you're able to separate all your transactions. And so you can almost imagine trying to run a business on a personal account, and at the end of the financial year, having to look at every transaction and say, this was a business transaction, this was a personal transaction. Oh, when I went to Tesco on the 12th of May, it was for business or it was personal. And so my advice would be, as soon as you can, get a business bank account. I know that, if I'm correct, Monzo and Styling also do sole trader/freelancer accounts that are suited specifically for people that are running their business by themselves. As I was saying, if you do decide to run your business using this personal account, it will cause unnecessary confusion and delays when you're preparing your annual accounts, when you're working out how much tax you owe, but also when you're reporting your business activity to HMRC and Companies House. when you're choosing who to bank with, people will normally choose the organization that they bank with. But it is worth shopping around to see if you can get a better deal elsewhere. My email is richard@comuzi.xyz. I actually have a spreadsheet that compares the different benefits that you will get from business bank accounts in this country. So if you do want that, pop me an email and I'll share that with you. Some of the important factors to consider when you are looking for a business bank account include the account charges and fees, recommendations from other companies or other people running the business, or your accountant, whether the bank provides a telephone banking service, if that's what you prefer, if there's an online banking option. I mean, if you were to sign up for a business bank account without an online banking option today in 2021, that would be shocking. What the interest rates are and if there are any incentives offered. So some banks will offer you incentives to sign up, whether that's free cash or free business support or a discount on accountancy software, etc., etc. Do I need to register myself or my business for tax by HMRC, and how do I do this? Most companies register for corporation tax as an employer at the same time that they register with Companies House. You will need to register for corporation tax separately if you've registered your company by post, using an agent or using third-party software. Now, my advice would be to go directly to Companies House and set up your business there. What then tends to happen is HMRC gets this almost like automatic notification that you have set up your business, and they will typically send a letter to you reminding you to sign up for different taxes. In order to register, you will need your company's 10-digit unique tax reference number, and this will be posted to your company address within 14 days of the company being registered with Companies House. So like I said, they will get in touch with you in order to register your taxes. When you are registering your taxes, you will need to tell HMRC your company's registration number, the day you started to do business, the day that you started to trade, and the date that your annual accounts are made up to. So typically that will be 12 months from the date that you started trading. So I'll use a simple example. If you started trading on the 1st of January, then your financial year would end at the end of January the next year, but essentially 12 months from that date. Are there government grants and or loans available to me? Government grants aren't easy to get hold of. They are very hard. We have tried to apply for a few at Comuzi, and there are quite a few requirements to get it. But they do tend to be given to businesses creating new technology or products that will benefit the UK. So they tend to be very either scientific, medicine focused, or technology focused. Grants are not free money. In many cases, again, you will need to prove the cash will be put to good use, and the application process is extremely exhaustive. I've also seen grants where essentially you have to have the cash available and spend the money, and then the government effectively pays you back for what you spent. So if cash flow is a problem for you, or if you don't have the finance to facilitate that, then a grant might not be the best idea or the best route to take. That said, for regular startups and small enterprises, there are a few government-backed schemes offering subsidies for the cost of starting up your business. I know that there are, if I'm correct, still grants available through the Horizon 2020 program, but I would suggest that you double check because of Brexit and because of the transition period, and because some of that funding might have been withdrawn. With Grantry is also a site that allows you to see if you're eligible for grants, and they also assist with the paperwork. I think they charge a certain percentage, so they'll charge a percentage of the amount that you would get from the government. If your business does not qualify for a grant, a good next step is the government startup loan scheme, which allows you to access cheap funding, mentoring, and support if you would like to start up a business. please take a screenshot of this. Alternatively, granttree.co.uk, 2T's, if you would like to see if you're eligible for a grant. Unlike a business loan, a startup government loan is an unsecured personal loan. So they will give you free support and guidance to help write your business plan. And if you are successful, you will also have access to 12 months of free mentoring. To apply for the loan, you've got to live in the UK, you have to be 18 and over, and you have to have a UK business or plan to start one that's been trading for less than 24 months. They are government backed and they tend to charge a fixed interest rate of 6% a year, which can be paid back between 1 to 5 years. If the only income that you get is from your wages or pension, then the likelihood that you will need to send a tax return is very low. But if you do have an accountant, I would suggest having a conversation with them. If you have any untaxed income, such as income from savings, investments, and dividends, money that's coming from another country, tips and commission, or money from renting out a property, you will have to send a tax return to notify HMRC of this income that you have made. You must send a tax return, again, going back to what we were saying, if you're self-employed as a sole trader and you earned more than £1,000 doing what you were doing, or if you're a partner in a business partnership. You need to register also if you didn't send a tax return last year. There are different ways to register if you're self-employed, not self-employed, or registering a partner or partnership. And if you do go to the HMRC or the Government Gateway site, there should be advice as to how you sign up. Will I need an accountant, and at what point will I need one? What are accountants and what are they there to do? Now, this is a very, very, very big one. Accountants, in a nutshell, are there to make sure that you submit the correct figures to HMRC and Companies House on time. But also accountants are extremely knowledgeable about tax law. And so what an accountant can do is go through your expenses and see where you can save money on tax that you might owe to HMRC. When we started Comuzi, we did not get an accountant for quite a few years. And one of the mistakes that we made was, I think there was a period in time where we were making money. We didn't realize we were charging VAT on the money that we were making, and we were spending all of that money. And when we got an accountant, and when he looked through the books, he said, there's about 8 grand worth of VAT money that you spent. And so we ended up having to pay HMRC about 8 grand in VAT. And so that's just like a lesson to get an accountant as soon as you can, or as soon as you can afford to, because they will look through your books. They will let you know where you can save money, but also they are experts. They are experts in doing up your books and showing how much profit or revenue that you've made. Accountants make sure, like I said before, they make sure that you pay no more tax that you need to by taking advantage of every allowance and every exemption possible that you might not know about. There are good reasons for hiring an accountant at different stages of the company. So whether it's business planning, whether it's company formation, whether it's looking for investment, whether it's a tax audit, an accountant can make life easier for you at each stage. This being said, you don't need to hire an accountant on a full-time basis. What will tend to happen is an accountant will probably spend a few hours every month going through your books and making sure that everything is okay financially. Like all small business owners who are looking to save money, you might not think that you can afford an accountant. But if we take a look at how long it might take you to do taxes, we can then question whether that's like a good use of your time. Because for the first few years at Comuzi, we would do the taxes ourselves. And because we weren't experts, you can imagine how long it took for us to get it right. As an example, let's say it takes 10 hours to do your taxes and your time is worth £100 an hour. That's essentially a cost of £1,000 to do your taxes yourself. And there's always the risk that you've made errors, as we did, especially if you're multitasking like most business owners. If you do get an accountant to take care of these time-consuming tasks, it's likely they'll cost less per hour than you would cost yourself. And that gives you extra time to generate more money, but also peace of mind that an expert is taking care of the details timely and accurately in line with HMRC's expectations. If I do get an accountant, how costly are they? If you are a contractor or freelancer or sole trader, as we mentioned before, fees can be anywhere from £50 to £150. And this will cover your year-end accounts being done, filing of your VAT returns, self-assessment, bookkeeping, payroll, and filing with Companies House if you're a limited company. If you are a sole trader or someone in a business partnership and you're not incorporated as a limited company, fees can be between £30 and £130 a month, and they'll cover the same services as above for contractors, with the exception of filing with Companies House. The initial fee that our accountant gave us was, I think it was about £150 plus VAT, and that was for a company. So there are very affordable accountants that you can find out there that will save you a lot of time in the long run and a lot of tax money, which is something that we learned over time. Limited companies pay a different combination of fees, which, like the examples above, will be paid monthly over a year. So like I mentioned before, we pay our accountant monthly, and he handles VAT, he handles payroll, he handles our tax returns at the end of the year. Fees for limited companies can vary from as little as £100 to £1,000, depending on the size and complexity of your business. So depending on the industry you're in, or depending on the services that you offer, HMRC might have different rules, and so that might mean more work for your accountant, and that might mean a higher monthly cost that you are paying. What are the best available options of funding and raising funds? So one of those, which is, I guess, the most realistic option for many small businesses, is to bootstrap your business, provided that your business isn't operating in an industry that requires a lot of money, such as manufacturing or transportation or logistics. You can potentially fund your venture, and it might be more feasible than you think. One of the kind of terms that is used in technology is like the MVP, which is a minimal viable product, and that's in a way saying, what's the smallest version of this venture or service? What's the smallest version that I can provide to my customers? And doing that should enable you to bootstrap your business, as opposed to going out to seeking funding. And that's not to say that you're dimming down your dreams. It's just saying, how do I start from a realistic place that I can then build over time as I start to make money? If you do not have enough savings to run your operation, there are other options, such as a business credit card that should give you low interest, offering you the chance to borrow cash without incurring interest. Investing some of your money will also make investors and lenders more willing to partner with you down the line, because it shows that you've put your money where your mouth is and you're dedicated to growing your business. Another option that you can use to raise money is by crowdfunding. With the right product and pitch, this is very possible. Crowdfunding gives you the opportunity to connect with people who you wouldn't normally engage, and might give you the opportunity to connect with investors who might be interested in investing a larger sum down the line. You can also gauge interest in your product and understand what's resonating with people and what's not, allowing you to improve your product and your pitch. But most importantly, crowdfunding allows you to raise money to fund your business. Well, how do you launch a successful crowdfunding campaign? You've got to develop your story, as people on crowdfunding sites like Kickstarter and Indiegogo would love to know how you've turned this idea into a reality. If you're looking at crowdfunding as an option, I would recommend that you check these websites, because you will learn a huge amount from the companies that are already there trying to raise money via crowdfunding and the strategies they've used to raise their money. Your story pitch should show the value of your product or service, the need it serves, and why you require support. And having a good website and doing PR outreach helps as well. This is an example of a successful Kickstarter campaign. So please take a screenshot. I will give you about 25 seconds if you're here watching this and you'd like to take a screenshot. 20 seconds feels so long when you're looking at the screen, but I'm gonna wait. Okay, I think that's 20 seconds. Thirdly, another option that you can take in terms of raising funds is to apply for a loan. Generally speaking, the small business loans with the most favorable rates are going to be small business account loans, but also loans from banks and other financial institutions. The loan application can be complicated, and in order to get approved, you do have to follow certain requirements, such as being in business for a certain time period, having strong annual revenues, and having a good credit score as a business. These aren't hard and fast rules, and so depending on the bank or the organization or the institution giving you money, those rules might change or differ. If you don't qualify for a loan, there are other types of funding available, such as a business overdraft and etc., which are more expensive in the long run. Before applying for a business loan, make sure that you prepare any documents that you need to show ahead in time. Typically, what organizations or institutions will ask for is your profit and loss statement, your balance sheets, your tax returns, and your bank statements. And in some cases, they will check your personal information to ensure that you are a credible founder. One of the ways that we tend to see people raising funds as well is by asking friends and family. This is a viable option for many. Ideally, you want to find a friend or family member who, number one, has the cash, who's got solid business skills, but they're also clear about the risks of giving you that money. One of the things that you should also agree is what form the funding will take. So whether that's a loan that you pay back or equity in a company. If it is a loan, agree to a repayment plan and you could use a peer-to-peer lending service to document everything and manage the loan. Number 5, you can find an angel investor. The most, I guess, well-known example of this is on Dragon's Den, where people go and pitch and they ask the dragons to invest a certain amount into their business and they give away a certain percent. Angel investors tend to be individuals with a net worth exceeding £1 million or an annual income of more than 200 grand. Some of them operate alone, but as you see on Dragon's Den, they might team up with other angel investors or they might form a fund. Angel investors can be a good source of capital for your business. You should have a solid business plan and a great pitch. You have to capture their attention with enthusiasm, but also the potential of your company. Angel investors and other investors alike will scrutinize your business plan. So if that is a route you are planning to take, be ready. Be ready for scrutiny of your business and be ready to answer hard questions that investors might have. If you're wondering how to find angel investors, there are many different resources online, but I'm sure that if you do a quick Google search, you'll be able to find like databases or lists of angel investors that you might be able to reach out to. This is an example of some angel investors, community growth ventures. Again, I will give about 15 to 20 seconds if you would like to take a screenshot and if you'd like to check them out. Community growth ventures is run by one of my great friends, Denzel. So shout out to him. If you're watching, Denzel, shout out to you, bro. I'll give you about 10 more seconds if you'd like to take a screenshot. 7, 6, 5, 4, 3, 2, 1. Cool. The sixth option is to get investment from venture capitalists. Venture capitalists tend to have large amounts of money. So if you do check some venture capitalist sites, they will say, we've got a fund of 30 to 50 billion pounds. And so they tend to invest in slightly more mature companies than angel investors and might want to have more of a say in running the day-to-day operation. So if you look at a lot of the technology products and services that we use, whether that's Twitter, Facebook, Zoom, you will see that they are funded by venture capitalists because they typically have the cash to be able to give to these companies to facilitate the growth that they want to achieve, which tends to be very expensive. VCs have a responsibility to achieve certain returns for the firm, so they will go and raise money from other institutional investors, such as pension, what are they called? Pension funds or banks or other large finance companies like hedge funds. And so because they have a responsibility to return that money or to return certain results, they will look for scalable companies with proven products and businesses, or they will look for companies with a huge potential to scale up. If your company does satisfy these requirements, you could apply for investment with a VC firm. It is not the easiest thing to accomplish, but plenty of small businesses have done it successfully, and VCs will tend to invest at different stages. So some VCs will say, we invest 50 to 100 grand. Some VCs will say, we invest £1 million to £5 million into a range of companies. Talking about VAT, VAT stands for value added tax. VAT is normally embedded in a lot of the products that we buy today. So if you go to the shop right now and buy Snickers, it might be 85, 90p, but there is VAT that the Mars company, because the Mars company owns Snickers, that they have to pay the government. You've got to register for VAT if your revenue goes over £85,000 or if you know that you will. So if you're currently running a business and you're making, or you've made 70 grand within the financial year, then that might be a good inclination or sign for you to actually start exploring VAT. Your taxable turnover is the total of everything that's sold that is not VAT exempt. So again, if you are selling products and services, if you are selling products or services that are not VAT exempt, you will have to pay a 20%. Essentially, VAT is currently 20%. You have to pay a 20% surcharge essentially to the government. So, for example, when we invoice at Comuzi, if there's a contract that is £1,000, we will add VAT 20%. And so the actual invoice to be paid is £1,200. If the taxable turnover of your business isn't 85 grand, then you can still register for VAT voluntarily. And there are two reasons to register for VAT, even if you're not making 85 grand a year. And one of those reasons is your customers are predominantly, if your customers are VAT registered businesses, then any VAT that they are charged can be recovered. So it makes no difference to their customers whether they are VAT registered or not. But also, one of the reasons why it might be good to register for VAT is if you are a business and you're not making, and you're not at the threshold yet, chances are you are spending money that you can claim VAT back on. So if you're buying things from Amazon, or you're buying things from eBay, or you're buying things from Argos in order to run your business, chances are those things include VAT. And so you should be able to get that money back from the government. Thank you ever so much for attending Business Finance Essentials. I'm not sure if there's any questions. I can't see any in the chat, but yeah, we'd love to get feedback before you leave. So please do fill out the feedback form. I'm also aware that this class is CPD accredited. So if you're watching from YouTube, you should be able to access the link. But yeah, thank you very much for having me. I can't see any questions, so I'm just gonna wait here for a minute, just in case there's any questions that might pop up in the chat.